Who is the ideal candidate for a max-funded IUL policy? In this video, I'm going to explain some powerful concepts, and by the end of this video, you will understand how IUL can be the dream solution for so many financial goals like retirement, college funding, working capital for business or real estate, emergency funds, estate planning, pension maximization for school teachers or police officers. You're going to be blown away. So stay with me. I'm going to show you and give you insights into opportunities that maybe you didn't know existed before. So I'm Doug Andrew, and I've been a financial strategist and retirement planning specialist now for north of 48 years. And so my goal is always to help you be able to see a brighter future. So as you proceed to learn, especially with these educational videos, I want you to sort of compare your life like to this magic coloring book right here. I want you to sort of wipe out all preconceived ideas or what you've always thought or been taught, because I want you to not miss out. So let's say that this is your book of life, and I'm asking you right now to sort of suspend your disbelief and withhold justifying why you think you can or cannot change or do something, and be open-minded to new ideas that may even seem a little bit counterintuitive. So I want you to wipe it all out, and so it's just like this coloring book that's just blank, okay? But as you watch each educational video, you'll begin to see opportunities in your life that maybe you didn't realize existed before. And so your book of life now will begin to have images in the physical arena, spiritual, financial, emotional, social, and so forth. So it's going to look like this one right here that has all these images in it. But it won't be until maybe you have watched 20 episodes that you begin to see in full living color your life filling in a dream future where you will not outlive your money, for example. So then your book of life will look like this one, that's all full of living color pictures. That's my goal for you in this episode. So you'll find that max-funded indexed universal life can be designed to accommodate people who are 20 years old. In fact, I put it on my children when they were born. But for young people that want to start socking away money for their future goals like retirement or college funding for their kids, and all the way up to age 80. Now, the sweet spot for me is helping people that have sort of made mistakes in their life financially, maybe following the herd, putting money into traditional accounts like IRAs and 401ks, deferring tax to some future perceived unknown advantage, and they usually go, well, I'll be in a lower tax bracket when I retire, right? And they get there and they're not. So I'm usually trying to correct or cure a financial dis-ease, because when you're not at ease physically, that's called disease. But when you're not at ease financially, you have sort of a financial dis-ease or tax dis-ease. So I like to cure those. But I'm going to show you here that it doesn't matter what age you are. Don't rule yourself out. And this can be used for people in their 70s. It's never too late. But let me give you just a glimpse of some of the best solutions that max-funded IUL can solve. Now, before doing this, as I go through, be sure and share this educational episode with somebody who you think would benefit, or post a comment so that we can respond, and we want to always be able to provide value. So as we look at this, often I've referred to IUL as a financial Swiss Army knife, so to speak. So it has a lot of different tools or blades in it. So when we look at this financial Swiss Army knife, it becomes the dream solution for many financial goals, such as retirement planning, death benefit. These are usually the two primary ones because people come and they want to protect their family in the event of an untimely death or an accident, and that's just simply being responsible and accountable. And so as we do this, people then can determine how much insurance they want for protection, And also, they're socking away money for living benefits, because IUL, or Universal Life, was originally designed back in 1980 for living benefits, not just the death benefit. But death benefit can be one of the objectives, and then sock it away money to accumulate it tax-free, and then be able to access that money tax-free. And when you die, it blossoms and transfers tax-free. It increases in value. That's what I mean by blossom, and transfers income tax-free. So these are two of the biggest benefits. Most people will come to us to look at indexed universal life. But what are some of the other solutions? We also can use it for college savings, funding, for your kids, for your grandkids. I mean, in my opinion, it knocks the socks off of a 529 college savings plan. It has way more flexibility. If you save money in a 529 plan, you can only use it for college funding. What if your children get a scholarship and they want to use the money to go start a business or to buy their first home? They would have to pay tax. In an IUL, you don't have to do that. And also, if you happen to pass away as a parent, your children will still have the funds available tax-free to go to college, even if you don't stay around to save that. That's the beauty of the tax-free death benefit. But there's more. We have a lot of business owners that use Max-funded IUL as a working capital account, where they keep their money accumulated that they can access on a tax-free basis to use in their business and become like their own banker. They fund it. It's their working capital. Why would you put money in a bank at less than 1% when the money in an IUL has more liquidity, safety, and higher rates of return, and it's tax-free? And you can access that money with an electronic funds transfer or a phone call, okay? So working capital for business, but also real estate investors use this. Because I know many people who own real estate, and when they're using that money and they're getting rental income, they put that rental income into their IUL policy. And then when they buy another property or what have you, they can take money out and be able to secure a new property with an earnest money or what have you. And then as that begins to produce income, they put the money back into the IUL policy. It's like being their own banker, but they're earning tax-free compound interest. And of course, on the real estate, the savvy ones know if they take out a mortgage, they are paying a lower interest rate that's tax deductible. If they borrow at 4.5% tax deductible, it's a net cost of 3% in a 33% bracket. And many IUL policies average like 9. That's 3 times as much as they pay in interest. So a lot of savvy real estate investors use IUL as their working capital account. What else? Well, an emergency fund. You know, I notice a lot of people will have $10,000, $50,000, $100,000 or more sitting in a bank or credit union as an emergency fund. Well, do you know you can bypass the middleman? What do I mean? Banks and credit unions put 30 to 40% of their tier 1 assets into insurance companies in instruments like this to increase the liquidity and safety on the money you put in their bank. You're actually lending them your money. So just bypass the middleman and increase the safety by usually 6 notches higher, the liquidity and the rate of return by maybe 4 or 5 times by using an IUL policy as an emergency fund, okay? Maybe a lump sum transfer of capital that you get from an inheritance or a settlement, or maybe you sell a piece of property or what have you. It can accommodate lump sums. Estate planning, if you're wanting to use it to also take care of creditors upon your death, or maybe estate taxes, or simply to set up your family bank, which is what we do in our family, and you can learn more about that on other episodes. What are some other uses? Pension maximization. In other words, if you were a school teacher retiring, they will try to convince you to buy the most expensive life insurance policy in your life by saying, don't you want to share this pension of, let's say, $5,000 a month with your spouse in case you happen to die? Well, yeah. Well, okay, well then you'll just be able to take $4,000 a month, let's say, instead of $5,000. So you're giving up an extra $1,000 a month to be able to, if you pass away first, to have your spouse continue to get that the rest of their lifetime. Well, you could take that difference of $1,000 a month and you could put it into an IUL policy, and you'll have way more flexibility. And when you die, it will blossom and leave behind far more money, but you can change beneficiaries if your spouse happens to pass away before you do. That's why you're maximizing the pension way more than what most states offer. Also, it's general tax reduction. So if you have money trapped in IRAs and 401ks and you're thinking, I'm going to keep deferring and taking RMDs, rethink your thinking. You may want to get that money out faster, sooner than later, get the taxes over and done with, and reposition that money into something that's going to be tax-free from now on. So in summary, what I'm talking about here is sometimes we look at a product like baking soda and we go, what can you do with this? And when I ask audiences, what are some uses? The women usually say, well, you can soak in the tub or take the odor out of the refrigerator. And the men usually raise their hand and go, oh, well, I clean my battery terminals with that. Finally, somebody goes, oh, it's good for baking. Yeah. Well, see, life insurance is for life. Most people think of it as just for death. So as you begin to explore this, don't focus on what it is. Focus on what it does. Does that make sense? So in a nutshell, hopefully you're interested in looking into an IUL policy because we have three big dangers in America in particular that cause most people to actually outlive their money in retirement, for example. Taxes going up, inflation, which cuts the purchasing power of the dollar in half right now about every 5 to 7 years, and we have market volatility because of the uncertainty in the market. We eliminate those dangers using IUL. So in a nutshell, the three greatest opportunities with indexed universal life is you convert to tax-free. Then it doesn't matter if taxes go up because your money's tax-free. You link your returns to the things that inflate. And so watch other episodes to understand how you can actually outpace inflation by using indexed universal life. And you also eliminate the downside, the losses, but you get to participate in the upside, the gain years, by using indexing because your money's not at risk in the market. That's the beauty of IUL. And of course, the three greatest strengths of an IUL policy are number one, liquidity. The ability to access your money when you need it. Safety of principal so that whatever you set aside, you will not lose due to market downturns. And any year you make money, that becomes a newly amount of protected principal. You will not lose in future years money that you made in previous years if the market crashes. And number three, you earn predictable rates of return tax-free. So that's the beauty behind it. And I would recommend if you have questions, make sure that you take advantage of studying the book, The Laser Fund. You can claim your free copy by simply going to thelaserfund.com or click on the link below. You contribute a nominal amount towards the shipping and handling, and I'll cover the rest of that. And I want you to look through and understand with charts and graphs and explanations how a laser fund can help you diversify and create the foundation for a tax-free retirement.